Chairman Powell.
Chairman Crapo, Ranking Member Brown, and other members of the committee, thank you for the opportunity to testify today at the first quarterly hearing on the CARES Act. This is a worldwide public health crisis, and healthcare workers have been the first responders, showing courage and determination and earning our lasting gratitude. So have the legions of other essential workers who put themselves at risk every day on our behalf. As a nation, we have temporarily withdrawn from many kinds of economic and social activity to help slow the spread of the virus. Some sectors of the economy have been effectively closed since mid-March. People have put their lives and livelihoods on hold, making enormous sacrifices to protect not just their own health and that of their loved ones, but also their neighbors and the broader community. While we are all affected, the burden has fallen most heavily on those least able to bear it. The sacrifices we're all making represent an investment in our individual and collective health. As policymakers, we should continue to do what we can to help cushion the blow. The scope and speed of this downturn are without modern precedent, significantly worse than any recession since World War II. We're seeing a severe decline in economic activity and employment, and already the job gains from the last decade have been reversed. Well more than 20 million people have lost their jobs, and recent Fed research shows that what others have also found, that people earning less are the ones being hardest hit. This reversal of economic fortune has caused a level of pain that is hard to capture in words, as lives are upended amid great uncertainty about the future. The Federal Reserve is committed to using our full range of tools to support the economy in this challenging time. Our actions so far fall into four categories. First, outright purchases of treasuries and agency mortgage-backed securities to restore functionality in these critical markets. Second, liquidity and funding measures, including discount window measures, expanded swap lines with foreign central banks, and several treasury-backed facilities to support smooth money market functioning. Third, with additional treasury backing, facilities to more directly support the flow of credit to households, businesses, and state and local governments. Fourth, temporary regulatory adjustments to encourage and allow banks to expand their balance sheets to support household and business customers. So far, we have created 11 facilities under Section 13.3 of the Federal Reserve Act to support liquidity, funding, and the flow of credit. All of these facilities have been undertaken with the approval of the Treasury Secretary, and many of them are supported by funding from the CARES Act. I've discussed these facilities in greater length in my written statement, which I've provided to the committee. At the Fed, we're committed to transparency, particularly in deploying our emergency powers. Public faith in our operations depends on that transparency. Thank you, and I'll be happy to answer your questions.